Hello everybody, Jackson here with the Well Squad. Today we'll be talking about inflation report. Today is Wednesday. We finally got the inflation report back for the month of June. Year over year, you can see right here it grew 9.1%, which means the money supply and everything that you normally buy to live, the money supply grew so much that your cost of living grew 9.1%, and your dollars are now 9.1% less valuable than what they were last June. So this is a lagging indicator of inflation because it is year over year. If it was month over month, it'd be a different story, but year over year is a good indicator just because some months are different than others in terms of economic activity. Uh, for example, of course, December, you're going to spend a lot more, or November, you can spend a lot more on food in November for Thanksgiving and plane tickets to visit your family and all that in November rather than April or May. So I hope that makes sense. But anyways, we're looking at a 9.1% inflation year over year growth from last June to this June. That is the highest since 1981 when it was 10.3%. We can see here inflation rate 9.1, previously was 8.6, so we grew 0.5%, half a percent in a month from last, what was it? From last May to this May and to this June, last June. So 0.5% increase. We can see here inflation rate month over month, 1.3%. Last month it was 1%. We can see consumer price index. You can see it keeps growing. That's obviously not good. That means people are spending more than they have to, than they should, than they have been. Rents increasing, services increasing, energy increasing, food increasing, imports increasing, exports increasing, producer price changes decreasing, core consumer prices increasing, core inflation rates decreasing. So it's mostly all bad. All right, let's just put it at that. And you can see since 42 years ago, it has not been this high. The last time it was this high, like I said, 1981 or so, when it was 10.3%. And that was December of 1981, if I believe so. So it's been 40 something years where inflation has never been this high. And who knows, guys, I think I'm actually bullish in the future because you have gas prices coming down, you have lumber prices coming down. Most of the commodities that we use day to day are down from where they have been, a couple months ago, a couple weeks ago, even. So since, of course, this CPI is a lagging indicator from, let's say, this May to next May and a year from now, I think it will be less than what we're doing right now. I think it'll be less than around 10%, just because we've seen prices come down so much on commodities that we use every day. So since they've been tracking it back, of course, I'm assuming this is 1920, you've seen some deflation, but that hasn't happened since, we can see right here, since the 1960s. If you're disregarding 2008, as you can see right here, 2008 was a big mess where we actually deflated because pricing and inflation comes from the oversupply of money in the system. And if money is getting lost at a rapid rate and the government is not replacing that money, then of course the inflation rate goes down in order to deflate the economy, and that's just what has to happen sometimes. That's what we almost saw during COVID. As you can see, we saw a 0% inflation rate just because money was strict. No one was really knowing what was going to happen, so not a lot of spending. And that's year over year, of course. So from last March to that March in COVID times was a completely different story in terms of spending. But now we're back. You can see a whole bunch of effects have come into place. The PPP loans from the government to businesses, the stimulus checks that came from the government to individual people. Unemployment is rather not high. However, a lot of people are still getting money from the government just to sit and do nothing. And then you're talking about the next year looking into next year, 2023, you're seeing California giving $1,000 or so to every resident to combat on gas prices and property prices and property taxes. And they're using, basically, this is what they're doing. They're spending money to help fight inflation, which is basically, giving gasoline away to help stop a fire. It only makes it worse. In the short term, you might see something, not with the gasoline example, but with the stimulus checks, because people will be able to have, better food for once. But that spending has to go somewhere, and that money has to come from somewhere. And in the end, it just hurts the economy more. And so I'm not too sure of what we're going to see. I know the next 6 months are going to be better than the first 6 months, because the first 6 months was the worst stock market return in 30 or 40 years. And if it continues at this rate, then we're obviously going to be in a deep depression. Right now, we aren't in a recession that is known because the GDP has shrunk over 2 quarters. Stock market, first 6 months are the worst in over 40 or 50 years or 30. But the thing with that is you can't get much worse. You cannot get much worse than the worst it's been in 40 years. That's a good thing and a bad thing. Bad thing is, we can see some stagnant movement in the markets, no real direction, and that's going to make a lot of people crazy. And then if the economy gets even worse, then we're going to see stock prices go even lower than they already are, and that'll create even more havoc for people with 401ks or people depending on the stock market to retire. They're going to have to go back into the workforce, and if there's no jobs available, then where is the money coming from? It's not coming from anywhere unless it's the government, which will only it will only worsen the inflation situation. So we're dealing with a lot of crises right now. The best thing to do is stack cash, continue making an income. Different investments are questionable. I would start dollar cost averaging, start buying here and there, but never putting a large lump sum and forgetting about it. Dollar cost averaging is definitely the way to go, because no one knows where the market's heading. But continue making an income. That's the best way to get out of this alive, is to have a constant source of cash flow. So I hope this video helps, guys. The inflation situation is bad. We're at 9.1% year over year from last June to this June. Who knows if it gets worse or better from here? My bet is it doesn't get much worse. However, I'm just guessing here. I'm not a professional when it comes to the economy. I'm not an economist. So let's see where it goes, guys. I hope you all the best, and I will hopefully see you in the next video. Thanks.